Hello and welcome to Morning Trade with Moneycontrol in association with M-Stock by Mirae Asset. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So guys, keep commenting on our live feed and we'll have it addressed by our guest on the show. But before introducing him, let's see what the global handover looks like. European stocks closed lower with all of the region's major indices slumping on the final trading day of the first half of this year. Stock 600 index closed about 1.6% lower with all sectors in the negative territory. The benchmark index ended the second quarter of the year down 9%, the worst three-month period since the onset of the pandemic in 2020. It was a sea of red across Wall Street too. S&P dropped 20.6% for its worst first-half decline since 1970. Dow lost 11.3% in the second quarter. Meanwhile, Nasdaq suffered its biggest quarterly drop since 2008, losing 22.4%. And Asian markets, meanwhile, the first of a new quarter on a mixed note as investors eye results of a survey on China's factory activity. SGX Nifty signals a muted start for the Wall Street as well. It's the first of the month. Auto stocks will be on the limelight. On the show, we discuss the future prospects of the sector and if the stock's outperformance will continue. In the stock spotlight, we take a closer look at the technicals of Phoenix Mills, Lupin and UPL. Let's get going and discuss some stocks that are likely to be in the spotlight with Ashish Chaturmohta of JM Financial. Good morning, Ashish, and thanks for coming on board. Before we talk about individual names, I want to understand how this new series could start. What is your forecast and what is your reading of the overall sentiment and technicals?
Hi, good morning, Karunya. Thanks for inviting me on this show. So as far as broader markets are concerned, if you look at we are continuously trading below important moving averages from an index perspective, and there was certain gap downs which we witnessed in the month of June series. Till the time we don't see such gaps, which is close to around 16,100 kind of trajectory, I believe that we are in a neutral to kind of sideways kind of trend in the market. Why we say so? Because on the lower side we have seen a low close to 15,200, 300 kind of trajectory. From there is a continuous buying interest which is coming into the market. But at the same time, since these gaps are not filled, we believe that markets are going to remain sideways. So ideally, the range for July series on downside, we expect index to see a lot of support coming around 15,400, 500 kind of trajectory. But at the same time, 16,100 is going to be a stiff resistance zone. So keeping that in mind, 15,400 to 16,000, 16,100 is going to be a broad range for the market. But within this broad range, we believe that the strategy should be buy on dips. Because if you look at a lot of these large cap names and specifically stocks like Reliance, if you look at into capital goods space stocks like L&T, and in the auto basket, we are witnessing a very strong strength in stocks like Maruti, M&M, or even for that matter, stocks like TVS Motors. And again, if you look into the pharma basket, there's again a lot of buying interest which is coming to stocks like Dr. Reddy's and Sun Pharma, which gives us a sense that a broader, stock participation from the large cap names are in a positive trend. So that will keep the momentum of the market on upside. So there could be dips, and as SGX is indicating, there could be a dip. But till the time we don't see a breach below 15,400 on closing basis, I think it's going to be a buy on dip kind of market.
But what is the trend looking like? Because not just for the coming few days, but for the next 1 to 3 months perhaps, because from the lows we have gained some ground, about 3.5% odd recovery we've seen on the indices from the recent lows. Is that momentum going to continue, or should we brace ourselves for more volatility?
No, I'm sure that there will be a lot of volatility because the concerns with regard to rising crude prices, rising interest rate, environment, geopolitical concerns, and even the commodity inflation. Although it has cooled off in the recent days, we have seen a dip coming into steel prices, aluminum, copper, but still we need some more confirmation. And till the time those confirmations are not in place, my sense is we have to brace with this volatility. There is going to be a lot of ups and downs, and until the time, from a technical perspective, we don't see a clear breakover above 16,100 on a closing basis. I think we have to deal with this kind of volatility. Why we say so 16,100 is because ultimately we are making a lower top, lower bottom structure on the weekly chart formation. Until this structure is not breached, we have to face with this volatility on the crossover above 16,100. That will be a confirmation that market has formed a good base around 15,300, and after that there is a continuous higher top, higher bottom structure which is in place. So for that we need a confirmation, and that confirmation comes about 16,100 trajectory.
Okay, all right, noted. Let's talk about some stocks that could be in this spotlight as well. Lupin, first up, it has received a US FDA nod for a drug that's used to treat schizophrenia. It's called paliperidone tablets. So some good news coming in terms of regulatory nods for Lupin. Let's talk about the technicals as well. The last 1 month has been completely flattish for Lupin. It's been hovering around from 590 levels to 600, 610 max. Where do you see this going?
So currently, if you look at the broad structure of Lupin, this is one stock which has underperformed not only against the broader market indices, but against its peers and the entire pharma basket. If you look at its all-time high was close to around 1200 kind of trajectory in 2021, and from there it is now trading at around 600 kind of trajectory. So clearly a 50% erosion has happened in the stock, despite the fact that Nifty Pharma as a basket is in a much better health. So this gives us a sense that the concerns with regard to US FDA and the kind of product launches and all has created a lot of selling pressure in the stock. Although some positive news which you are indicating can have some bearing on the stock, but my sense is the stock is in a weak trajectory and it needs to cross 640 on a closing basis to give us some meaningful indication that there's going to be some short-term reversal. So although I'm very positive on the entire pharma basket, but from the stock perspective, I think Lupin is one stock which is going to underperform the broader pharma basket.
Okay, all right. Let's also talk about Phoenix Mills. There's some development there as well. GIC's realty arm is going to invest 400 crores in the subsidiary of Phoenix Mills. So this is Rico Zinnia, which is the realty arm of GIC. They're going to pump in this 400 crores in subsidiaries ODPL, GRLPL and VDPL. These are the three subsidiaries of Phoenix Mills. So I think this also is likely to augur well for the company and even perhaps for the stock price as well. Realty space overall has also been quite resilient in the recent past, whether we look at the 1 month trend for a Phoenix Mills, 3 months as well. So talk to us about how this could pan out for Phoenix Mills, not just this development, but even on the charts. If you can talk to us about some trends that you're reading.
Yeah, so kind of we are very positive on the real estate basket because of this, mortgage rates below 8% kind of trajectory. Affordability has increased significantly in the 5-year period, and if you look at the 7-year CAGR of the real estate prices, it has been close to 1% kind of thing. So this gives us an indication that property prices have not moved up significantly in the last 7-8 years. Income levels have risen significantly in the last 8-year period, and interest rates are below 8%. This is a perfect mix for the real estate cycle to go on upside. Also, if you look at the inventory level, it is close to 18 months, so which is like the bull market, the bull cycle of real estate starts if the inventory levels are below 22 months, and at one point of time it used to be 36 to 40 months. So that's a significant correction in the inventory level, and that's very positive for the real estate cycle. So keeping that in mind, I think the overall real estate cycle looks quite positive, although stocks like DLF, Uber, they have corrected off late because of some rise in input prices of other commodities. But all in all, I think the structural medium to long term trend is quite positive, and that trend is clearly getting reflected into Phoenix Mills stock, which is continuously trading at its all-time high, and there is a significant delivery volume which is picking up into the stock. So that trend is clearly visible on the stock. My sense is 1100 is going to be a very strong support for Phoenix Mills, and on upside 1350 to 1400 is what one can expect in next 2 to 3 months time frame in Phoenix Mills.
Okay, all right. The third stock on our list is UPL. They've acquired a crop protection company called Nature Bliss Agro. And now after this acquisition, NBAL, the Nature Bliss Agro company, will become a wholly owned subsidiary of UPL. This company has essentially proposed to manufacture and sell crop protection and allied products. Now, of course, this is, sort of an allied sort of a growth that the company is looking at in the inorganic space by acquiring this company. But UPL, if we look at it, the last 1 month from 780 levels, the stock has only been sliding and going one way, that is down. Talk to us about the technicals, and also, on the fundamental side, typically around monsoon, you see many of these farming and agro-based companies do well, especially when the forecast is of a normal rainfall and normal monsoon as well. So that hasn't happened this time with UPL. So what is your forecast on this particular company and the stock?
Yeah. So currently, if you look at most of the agri crop companies or the fertilizer companies, they have seen a very strong correction in the last 2 months time frame. Whether it's a Deepak fertilizer, whether it's Chambal fertilizer, whether it's companies like UPL. This is obviously because of rising input prices, which most of these companies are facing, and that's leading to some margin erosion. But if you look at the broader trend or the broader structural story of these companies, we are very positive. Obviously, our liking in this space is PI industries, which is more structural in nature. But definitely, if we look into UPL has seen a very strong correction from 850 odd levels to close to 630 trajectory. But if you look at this is a very strong support zone, or I would call as a make or break level, because this was an area from where we have seen a significant breakout in May 2021, and from exactly at 610 620 trajectory, the stock moved to 850 kind of levels. Now we are close to those levels, so my sense is 610 is going to be a very, very strong support zone for the UPL. Till the time we don't see a breach below 610, my sense is the stock is going to see a lot of consolidation at current levels, and eventually there could be an upward trajectory which could be witnessed in UPL. So my sense is this is the area where ideally one should start accumulating the stock. And as I mentioned, the preferred bet in this entire basket would be PI industries, where I think clearly 2400, 2450 is a very, very strong support zone. We have seen stock continuously, seeing a 20% plus CAGR growth in terms of earnings, and there's a lot of capex which has been done. So my understanding is, PI industries is poised for a move towards 2850 to 2900 kind of trajectory.
Okay, all right. Ashish, request you to stay on hold. We're getting a lot of queries as well, so we'll come back to you in a minute. For now, I want to understand what's happening in the auto space. Today is the first of the month, so the wholesale numbers will start trickling in as well. Piyush Parag joins us from Sharekhan. Hi Piyush, good morning and thank you for joining in. Talk to us about the outlook for the sector. I mean, the sales are going steady because of course the low base effect is at play. Supply chain issues are also easing, but they are still not quite there yet if we compare it to pre-COVID levels. What is the sense you're getting on the sector, and do you think that the resilience and the outperformance it's been showing vis-a-vis the markets, vis-a-vis the benchmark indices, that could continue, or could it slow down going forward?
So, see, the whole, the things are improving, and that's what we look into, right? When the markets look into how the future looks like. So, of course, the supply constraints, which has been a major pain point last year, this year is now easing out, right? Like, chips issues, there's an issue, of course, there's an issue, but it's easing out. Every quarter we are seeing improvement. So we expect that's to improve. The second important fact is that about the raw material costs. Now, which is again cooling down, or it's going towards stability. So, which is again very positive, because all these companies where we are seeing good demand, because all the companies have been able to take the price hikes. So that shows that there is a lot of underlying growth, opportunities there. Of course, we have to be selective in our approach. It's not like that there will be that will be a one-way run in the stocks. So we have to look into these three key points going forward, and I believe it's a positive. Valuations are also very much comfortable valuations are there. So we should we should pick good stocks and should remain invested or start investing into automobile sectors. Yeah.
We've seen, the sales numbers for April, May, June numbers will be out any time now as well. Overall, how do you think Q1 has panned out for the sector, and how will the results sort of reflect that?
So I believe, as I said, the numbers are likely to be good this month. Well, I'm not really looking into like year-on-year growth, because of course last year it was not really comparable. But overall momentum is good. CV is doing extremely well. Even there is sequential growth. Look at two-wheelers, that has also improved, and I expect even today we should get some good numbers from all the three companies for especially in the domestic market. So that is positive. That is going to be positive. Similarly, for passenger vehicles also, we are seeing very good numbers.
Piyush, I was referring to the Q1 performance of these companies, on the financials, on the earnings front.
Right. So, yeah, of course. So the volumes are good for this quarter. The second factor is your cost margins, so which I think would be better for all the companies going, for this quarter compared to the Q4. So the improvement in margins will continue. So these are going to be the key factors. I especially like, Mahindra, Maruti would come out with a good results this quarter. Yeah.
Okay. Within the basket, any favorites you have, whether it's a PV space, CVs or two-wheelers, or perhaps tractors that you like right now? Who will be the big outlier?
I believe passenger vehicles. Maruti would do well, and M&M will do well. These two are doing extremely well, and they are in a way to regain their lost market shares. So I will bet on these two stocks.
Okay, well, that would be very exciting to watch as well, because, after a very sluggish or a very, slow recovery or slow growth for the last few quarters and months, it would be interesting to see how, the cost and the easing commodity prices, easing supply chain issues as well, sort of reflect on their performance. Thank you so much, Piyush, for joining in and for giving us a heads up of what to expect in the Q1 numbers and how the monthly sales will also pan out this time around. Let's get back to Ashish then and address some of our viewer queries. I want to pull up a Saregama India. This is a stock that we don't talk about very often. We've got a query on this one, Ashish. Shashidhar wants to know your view on Saregama, and, it has been fairly weak, actually. From April highs, the stock came down crumbling to 350, 360 levels. And since mid or May end, the stock has been sort of, hovering around, or rather trading in that range.
Yeah. So I think, Karuna, this stock is making a lower bottom formation on the weekly and monthly chart frames, and still no major signals of strength is coming. And this has nothing to do with Saregama. There is a general sell-off which we have witnessed in the small cap basket. So a typical 30% correction from the top is a general phenomena. So I and if I have to compare it, and we always try to look at a stock in conjunction with its indices or the benchmark, then I don't see a meaningful weakness which is there into the stock. But definitely from absolute perspective, there is a weakness, and this weakness can continue till I think 320 kind of trajectory. 320 is going to be a very, very strong support zone for the stock. So if he's a typical buy and hold kind of investor, then definitely I think he should hold the stock. 320 is something which we should be closely watching out. If in case the stock reaches 320, then that's the time one need to take some corrective action. Otherwise, it's a buy and hold at current levels.
Okay. We also want to address the D Street darling DMart. How's the chart looking to you? Because May definitely was a very weak, very poor month in terms of stock performance for DMart. But the stock has witnessed some recovery since May end. Is that upward trajectory likely to continue?
So my sense is in May, the stock has formed a low close to around 3,200 kind of trajectory, and after seeing a correction from close to 6,000 levels, it's close to kind of 48-45% kind of correction which we have already witnessed. So absolutely speaking, there's nothing a challenge in terms of business perspective. There's just one thing which is happening is a de-rating in the PE multiples, and this is across the board wherever we have seen these growth stocks. Growth stocks are seeing this challenge because of rising interest rate environment. The discounting factor is increasing, and that's leading to a correction into the multiples. And that is exactly what's happening to Avenue Supermarket. My sense is 3,200 is going to act as a very strong support, the low which we have formed in the month of May, because since then there is an increased volume activity which has started happening into the stock, which is giving us a sense that 3,200 is going to be a key support zone, although it will take a lot of time for stock to see a recovery towards 3,900 to 4,000. But from a risk reward perspective, my sense is 200 rupees is the risk on downside, but whereas it will take another 2-3 months, but eventually stock is poised for a move towards 4,000 to 4,200 kind of trajectory.
Okay. Unfortunately, that's all the time we have to address our viewer queries, guys. Perhaps you can touch base again on Monday and ask the questions you have. But Ashish, before we let you go, I want to know what are your personal picks in the market right now? What are the stocks you're looking at?
So, Karuna, we are very positive on the auto basket. In fact, we have witnessed we have recommended this entire basket of auto names. So, Maruti, M&M, TVS Motor, Eicher Motor, and Ashok Leyland. These are the 5 stocks which we recommended, last week. Most of these stocks have delivered close to 8 to 10% kind of upside, but we still believe that this is a new start of the auto, rally. Because if you look at there was a 5-year consolidation, and typically, which means that in the last 5 years, nobody has made any significant return in the auto stock, because 2017-18 when the auto index peaked out, and from there we have been witnessing a consolidation. Eventually, after 5 years, in the last 2 months, there was a relative strength which started coming into auto basket, and stocks like Maruti, Mahindra, they were not ready to participate in the downward trajectory of the broader indices, which clearly indicated that most of these stocks are getting ready for the next upside. So my sense is auto is in a sweet spot. Our liking in the space is Maruti, M&M, obviously in the large cap name, and Ashok Leyland to play this entire CV cycle. So if I have to pick in this basket, Ashok Leyland would be my top pick from a shorter term perspective. Stock has formed a very strong inverted head and shoulder on the weekly chart formation. Tata Motors has increased commercial vehicle prices by 2.5%. So this is clearly getting reflected that the CV demand is coming back, and that's where I think Ashok Leyland is poised for a move towards 155 to 160 kind of trajectory in a shorter term. 142 should be kept as a trading stop loss, and any dips in Ashok Leyland should be used as an opportunity to create a long position. Second preference is Reliance Industries. Obviously, Reliance Industries, we are seeing that ARPUs are in a structural growth, trajectory, and gasoline margins are at multi-year high because chemical prices are moving up. So all in all, we believe that our Reliance is showing very strong trend, and that is getting reflected into the technical charts as well, where the stock is continuously trading above its short-term moving averages. There's a strong, base which has been formed around 2,500 levels. So keep 2,500 as in trading stop loss. On upside, we expect the stock to hit 2,800 kind of trajectory in the next couple of trading sessions. So shorter term, 2,800 is my target, but eventually we expect the stock to hit 3,000, 3,050 kind of levels in next couple of few weeks.
Okay, so Ashok Leyland and Reliance top picks coming in from Ashish Chaturmohta. Thank you so much, Ashish, for joining in and for sharing your insights and your observations on the market and different stocks with us and our viewers. Guys, thank you so much for tuning in. That's all we have on Morning Trade today. Stay tuned. Markets with Santo and CJ is coming up next.